All right. A very good morning to everyone on the West Coast. Good afternoon, everyone else. Welcome to today's webinar. I'm Rahul Bindlish. I'm Vice President of Sales for Grid Dynamics. We are a technology services company focused on digital transformation of enterprises in the US. We're headquartered in the Bay Area in California. We have a very eminent set of panelists today for today's webinar. We do these webinars, throughout the year. Actually, we're doing 2 every month. Today's is part of a series that we do on the financial services that includes really banking, financial services, and insurance companies for us. Let's go through a quick introduction of our panelists, starting with Jimmy.
Yes, it is a pleasure for me to be here, and hopefully I will be able to answer most of all the questions. And the topic is it's a topic of passion of mine. And I just want to let the audience know that just a quick disclaimer, I am a practitioner and I'm a researcher on the topic of digital banking. And the views and opinions I will be expressing today in our discussion come from my research and from my years of practice, and belong solely to me and does not represent the views of my employers in any organization that I will be sharing, that I will be taking as example. But it is a pleasure to be here, Rahul, and looking forward to the panel discussion.
Thank you, Jimmy. Jimmy, welcome aboard. Sudhakar.
Hi, good afternoon, everyone. My name is Sudhakar. I work with Truist. My employer is in a very unique situation. You would have probably heard SunTrust Bank and BB&T merged together to form Truist. So we are right in the middle of a merger. As part of my organization, all authenticated public-facing websites are under me. So again, I'm going to borrow what Jimmy said. My opinions are pretty much coming from my experience and what we're trying to do, and not a view from the company.
Thank you, Sudhakar. Kiran.
Hello, everyone. Kiran Nadgir. I head the API and UX platforms at Silicon Valley Bank. We're headquartered in Santa Clara with offices all over the world. And I manage the build out of their API platform, API governance, and both for internal and external APIs and the user experience platforms as well. Glad to be
Thanks,
here.
Kiran. Thank you. Raj.
Hi, I'm Raj Kumar Bondugala, and I'm a data science fellow and vice president at Equifax. I run a team of data scientists and big data engineers, and we are part of Equifax Innovation Office. Our charter is to work on capabilities that would bring us revenue in 3 to 5 years. And here, like Jimmy and other people, most of the opinions expressed in this talk are my opinions and do not necessarily reflect the opinions of Equifax. Thank you very much.
Great. Thank you, Raj. So we'll get into a discussion about the top technology priorities for the industry in 2021. I'll start with you, Kiran. What are the top 3 opportunities that you are prioritizing in 2021 for business impact, and how do they compare to 2020?
So I would say that where 2020 made a difference for us was that it helped accelerate a lot of the transformation initiatives that we had planned beginning in early 2019. The difference that we saw, we're seeing this year is the acceleration on all of those initiatives, right? So when we look at what are the top 3 opportunities that we see, I think it's more than just 3. So I will expand that on a little bit. Essentially, if I were to circle them up in 3, it's essentially technology modernization as a whole. And I'll go into details of that as well. There's data and analytics and essentially globalization of our capabilities, right? And when we look at globalization, it goes back to my first point of modernization, which is saying that what does modernization really mean from a technology perspective? It goes along the lines of cloud adoption, right? It goes we are building out our API platform. We have an API strategy in place. It also includes DevSecOps, quality engineering, and automation around all of this, right? And as part of our acceleration, what we have done is we have set up centers for enablement, which is, again, building out those capabilities, providing all of these capabilities as a service so that the teams that are building the products and services are able to do that in an automated fashion, as much as an automated fashion, including the governance automation as well, right? So reducing the dependency on people to do certain things by leveraging automation is key. From a globalization perspective, taking capabilities that we're building for the US, for example, and making it available in UK or Europe or India or what have you, it's leveraging the cloud and all of the automation around it is where we are going. So those are the top three for us, which is modernization, leveraging data and analytics to help business make better decisions. So we are also focused, that's one of our top priorities for 21, and the global operating model.
Thank you, Kiran. Sudhakar, your bank is significantly different compared to Silicon Valley Bank. You're more consumer focused. How do the priorities look like for you?
Thanks, Kiran, for kind of throwing light on the priorities. From our standpoint, we are uniquely positioned because of the timing, right? We are right in the middle of a merger. It's not fully completed, even though we announced it last February. The process is not complete. So we have different challenges. At the same time, we are uniquely positioned because both the banks have similar systems. We were competitors to be kind of in the market, right? Very similar sized. The market segments could vary, but then we had similar applications that are there. So we are uniquely positioned to kind of pick the best that is going to be there, and at the same time, do what we thought is the right solution, right? No tech debt need to be carried forward and things like that. So with that unique position, the top three priorities, the first one is really supporting what we call as client day one, right? The legal day one is the day we got recognized and our stock got repurposed as Truist. The client day one is really where a client walks into a branch or goes online and then he sees the Truist brand. Today he sees BB&T brand and SunTrust brand because that's the way it is today. So our first priority is to make sure that we support our clients on the client day one, which is coming up the first quarter of 22. Right? So we have an entire year of work planned for that. While we are doing that, two other aspects that actually come our way is the client experience, right? Client experience, we could just pick anything that's out in the market and do the websites and the mobile applications that are there. But today, the client um, expectations are changing, especially with the biggest digital transformation agent called COVID. Everybody is now digital, right? Everybody's expectation is different. Everybody wants to bank in a certain way. So we're trying to marry the demand that we saw coming in from last year's pandemic, plus the best practices from both the organizations. So digital experience, taking the bank to where the client wants us to be, is the second priority. The third one is really availability, right? Digital availability. And that's probably where what Kiran mentioned comes into picture. Technology modernization, leveraging cloud, whole bunch of other things where we can make our systems completely available. What's the point in having the best of breed if it is not available, right? So not only are we dependent on a whole bunch of third party partners to provide our services, um, we wanted to focus on having the truest digital services available 24/7. So the top three priorities again, honoring our client day one, making sure that the digital experience is top notch, and digital availability.
Thank you, using digital technologies has seen a huge uptick post-COVID. So just a follow-up to the priorities, how are you looking at from an innovation budgets perspective? Are you investing more in 2021 compared to last year?
Uh, Absolutely. So, Rahul, innovation has kind of been ingrained in BAU, right? I kind of look at innovation as two different parts. One is kind of that which is ingrained in each and every thing that we deliver. Um, and the second one is that which breaks the ground, right? For example, we are talking about BAU, like including Alexa, making sure that the function features are available with our regular channels, right? And people's expectations are very different, right? People want to make a payment to their bill using cash. That's normal, right? Whatever money is in your bank, you use to pay. But today, the expectation is that I should be able to pay using a credit card, debit card, to the extent that if somebody had miles in an airline, they would like to use that to pay their credit card or their utility bill, right? It's kind of innovation coming from that standpoint. Um, Specifically for Truist, one innovation has always been part of our BAU, I'll call business as usual. But in addition to that, because our headquarters is in Charlotte, there is a innovation center that we are putting together more for folks to come together and start ideating, right? Um, Now things could be very different. You have regular digital where you go to online or mobile, but then there is this new areas that people are used to, like the Xboxes of the world or PlayStations, right? Can you bring in a banking experience to those users where they are currently? So uh, there is the groundbreaking innovation that is also being looked at. So between the two, Rahul, we are looking at constantly innovating not only our client experience, but at the same time make sure that we are continuously educating ourselves, right, to deliver to our clients.
Thank you, Sudhakar. And Raj, Equifax is different from other companies being represented today, or leaders from other companies that we have today, in terms of it being more of like a credit bureau than a real bank. How are priorities and innovation looking for you in 2021?
So in Equifax, innovation is considered within the DNA of the company itself. Like pretty much every business unit and COE are constantly innovating. So we are constantly required to do that. In addition to businesses and COEs constantly innovating, we also have a specific innovation team, and which I am part of, to go deeper. Who our full-time job is to think about developing capabilities that will bring us revenue in 3 to 5 years. So our innovation happens in terms of our core is risk modeling. Like for example, the major use of our data is risk modeling. So we constantly are striving to innovate in terms of risk modeling, and both in terms of the data that we create, the attributes that we create, and the modeling technologies that we create, and the use of this data in different. So innovation happens in many aspects. Then as far as marketing, so similarly, so we do have multiple data assets within whatever governance rules, and within that constraints, we are also constantly thinking about how can we use this data for novel marketing applications. And finally, fraud is our third major business, where we are trying to use we're trying to use how can we use all of our different data assets to prevent fraud. Like we play in the space of account origination fraud. So that is like when somebody walks into a Truist bank or like a Silicon Valley bank, we want to make sure that the person is it's actually who you say you are, and we specifically play in that space. Now with our acquisition, there's also now we are also going to play in other spaces as well. So within these three contexts, like risk, marketing, and fraud, we constantly are keeping trying to understand what is the latest and greatest in terms of machine learning. So like when we have our team, we already have close to 20 patents in the last 5 years or so. We come up with different things, we demonstrate the value of it, like in terms of deep learning, in terms of graph technologies, in terms of other use of AI and ML and NLP, in terms of how can we extract information from our data. Specifically, we're also looking at unstructured data and so on.
Thank you, Raj. Jimmy, I will move on to you. And we are seeing a trend and a lot of buzz around services platforms. In fact, according to one survey, 80% of the banking executives believe that the future of finance is a services platform that consumers can access via mobile. How are you staying ahead of that trend?
All right, that's an excellent question, and I'd like to start by saying, do you remember the famous commercial of Capital One that says, "What is in your wallet?" I mean, other banks, I'm sure, were working on the background. However, they were pretty much shouting it at the top from the mountaintop and pretty much in every single of their commercial. So banking is and will continue to trend towards digitization, just like the other panelists just mentioned. COVID-19 pandemic accelerated or revealed the value of financial technology solutions and enhanced user experience, seamless functionality, greater control and visibility into finances is what many corporate and small business end users are really demanding to be part of their banking experience. And I'm trying also to make the distinction between banks, which is the traditional brick and mortar financial institution that we go into. So you have commercial banks, retail banks, shadow banks, credit unions, versus banking, which is the transaction, the business activities where we conduct doing payment, deposits, lending, and so forth. So how are we staying ahead of the trend? So Bank of America is really leading the pack. American Banker revealed that Bank of America has dominated digital banking by all measures and has planned to stay ahead of the game. Here are some numbers that I can share with you, and I believe those numbers may have changed since their general release. Bank of America has more than 66 million consumer customers, and 10 billion times a year is the number of interactions between Bank of America and its consumer customers. And 90% of those interactions are digital. I mean, mobile, online, and also to the interactive voice response. There are about 38 million digital users, 19 million mobile banking logins a day. There are about 30.4 million mobile banking users. So, and also the bank has the artificial intelligence virtual assistants called Erica. If you're Bank of America, you remove the AM, you have Erica. Erica, there are about 12 million users getting help from Erica per month. And also the bank has the Zelle application. There's about 11.7 million people use on the bank version. So how is the bank staying ahead of this trend? The answer is simple. Bank of America is a company that has for goal to bring never before possible convenience to clients. So when you bring all those technologies, all those digital aspects, whether it's current trend and future trend, you bring in and you try to normalize it to the day-to-day clients so they don't have to worry about the technology itself, but mainly the processes by which they need to get things done. One of the recent innovation or release the bank has is the new digital debit card that clients can use to perform transaction immediately without waiting for their physical permanent card. And as we move forward towards a cashless society, which probably will take some time, the credit card area most likely is going to be the next sector that will start seeing some type of fragmentization as people now will start dealing with digital card instead of the physical card itself.
Great. Thank you, Jimmy, for that detailed response. Sudhakar, you have a unique challenge with the merger as well. How is it for you in terms of this trend?
Yes, so Rahul, I think both the heritage companies applications have been rated pretty high by Javelin, right? So that kind of sets a stage saying that when we do the work for Truist, we kind of need to beat our own records. So if you look at mobile application, it becomes table stakes, right? If you don't have a mobile application, you're not a bank at all. And if you start looking at the usage of it, it comes handy because of the way it is put together, right? For example, if you get a check, your mobile application is the one that allows you to deposit without even getting off your house. You have a problem, your alert comes to your mobile and you have actionable alerts to prevent a fraud from happening, right? Though it goes to email as well, the device that is always stuck to you is your mobile device, right? So warnings, alerts, all those are coming to your mobile devices. Now there are many applications, like if you switch your consumer to corporate world, even the corporates are now starting to adapt mobile, not because of the function feature richness, but more from executives, right? You start having wire approvals attached to your mobile device, and then anybody in your accounts receivable raise a request, your exec may still be in a board meeting, but the alert is what is going to kind of what to say, subtly inform him that there is something important waiting for him amidst another important board meeting, right? So the usage of mobile application has kind of come to being of its own. So you probably need to be there. So whatever Jimmy mentioned, they kind of proves that mobile is really where the application needs to be. But come to think of it, there is another set of mobile application that comes to, right? So for example, Alibabas of the world or Amazons of the world, they have kind of come to a different set of consumer base that uses these applications. Now, you have many ways in which you can pay for them, right? We, as a financial organization, are looking at something called the embedded financials, right? Where you could be the funding source for making a payment to something that you buy in Amazon or in Alibaba, right? So not only are we going to have an application of our own, but we need to be able to find ways in which we can coexist in an ecosystem with the partners to be able to provide services for them. So think about Amazon options coming down and saying credit card, debit card, your PayPal, and then your own bank, right? If you have an option to pay with your own bank, you would feel much safer to make that transaction as opposed to providing your detail to an external source, right? Given all the fraud and security hacks that are out there today. So kind of morphing itself, it's becoming or trying to take a life of its own as we go. So the two priorities, one, kind of looking at your current BAU needs of what the customers want, and two, trying to be in places where you coexist in an ecosystem.
Great. Thank you, Sudhakar. Quickly for the audience, I see there is one question being asked in the Q&A section. I will come to the Q&A at the end of the panel discussion, which will be about 35 minutes past the hour. If others have questions, please keep adding it there, and I will pick them up for our panelists at that point in time. Some of you touched upon customer experience, and that's clearly a big competitive advantage for every financial institution, whether bank or otherwise. Kiran, how are you looking at modernizing customer experience this year?
Sure. So I would expand on that a little bit. I know customer experience is absolutely critical as we are serving customers, but what also impacts customer experience is the employee experience, right? So we are looking at it from both those angles, and what are the changes that we need to do to be able to do that, right? So, and where 2020 helped us refocus our efforts was really on the digital part, right? Making sure that we are a relationship-driven bank, right? A lot of it was in-person meetings with clients and discussions and all that, but now everything has gone virtual. So focusing on taking that experience that was a physical experience and moving it to a digital world, right? Which means that how do we take our, for example, onboarding process, right? Which involved a lot of manual work. Now do we completely digitize it, both for the customers and our employees as well, all the relationship managers that we have, right? So that's an example of how we are addressing or changing that customer experience. So taking not just onboarding, but servicing and even payments, right? I think Sudhakar made a point of that, of embedded finance. But expanding that on a little bit, right, where we are focusing from enhanced customer experience is that it's no longer necessary for customers to leverage your a bank's online portal to conduct transactions anymore, right? That's where we are leveraging APIs to not only power our online banking systems, but also empowering our partner ecosystems to leverage the same, which is where you are providing a similar experience irrespective of where your customer is interacting with the bank from, right? So, and that is the key here, is that irrespective of where they come in through, whether they're coming through an externally exposed API or they're using your online banking experience, that that consistent experience across different channels is the key, right? The other parts is other two things is what Sudhakar touched upon as well, is the reliability, right? It's not enough to say that you have a great mobile experience or a great online banking experience, but how reliable it is, right? When a customer submits a payment, for example, how do you guarantee that it's going to be successful, right? Or if it's not successful, then how do you make sure that there is a way for them to fix that? So making sure that the experience is not only consistent but reliable and available 24/7, because we are in that world now where, you know, the bank branch may close at 6 p.m. or whatever, but the transactions keep going for 24/7. So we have to that has accelerated a lot, especially now. And that is going to be the path forward, right? We are no longer a 9 to 7 operation, but we have to make sure the systems are available. And lastly, it is the analytics and the what do you call, the data that is provided to the customers, right? How do we leverage the data from all the interactions and help them make better decisions? And I think we are, being a commercial bank, we are in the space of startups, right? And we help build startups. We take them through their life cycle. So as the needs for these companies change, how do we build that life cycle experience to help them do better and do it digitally, right? So overall, those are the things we are looking at. How do we digitize the experience? How do we provide a consistent experience for irrespective of the channels? And how do we make it reliable and more self-serve than before?
Great, thank you, Kiran. And Sudhakar, being responsible for online banking and client portals, I assume you live and breathe customer experience every day.
Absolutely. Absolutely.
How does it look for you this year?
So that definition has been changing constantly, Rahul. So if you looked at earlier, customer experience was around providing a good environment or the layout where people can interact with your banking experience, right? That was kind of what was originally there. But now the clients are asking for something more, right? They make transactions, we provide them the information, right? What they are now looking for is insights and intelligence, right? To what Raj and Kiran both alluded to, right? The artificial intelligence is really where people are looking at. They're asking, okay, all the banking transactions that you do, what does it mean to me, right? Am I going to be having enough money to make my rent payment for the month, or do I do things like, duplicate payments like for streaming services, right? If I pay Netflix as well as this, uh, can you show me, or am I paying Spotify as well, right? So they are looking for insights from the banks that we are that they want their financial well-being to be taken care of, right? So we are kind of considered like the doctors. You can say a regular doctor or a veterinary doctor, right? Veterinary doctor has to figure out what's going on with the patient, while a regular doctor kind of can talk to you and say, hey, what's going on, I have a fever or whatnot. So we are now more moving towards the veterinary doctor psychology, where we need to understand what the client really needs. And he's not going to tell you that it's paining or it's doing this. But you can be very sure that if you don't do that, they're going to go away to the next bank that's available, right? Or what's going to be delivered to them. So customer experience has been more towards this insights and intelligence. The second aspect is really on the security part of it, right? With so many digital presence and so many transactions happening in digital world, the key that they are looking at is how secure is it for me to operate with the bank, right? So not only am I going to be having a spread of buffet of services, am I doing it in the right manner, and am I doing it in the most secure manner? That's kind of the challenge that we have seen, Rahul. um, so the COVID has not only just made that worse, because if you go back and take the last 10 years trend, it's come to a complete flip flop in the last 10 months. So people's expectation has not only increased, skyrocketed, but their expectations are way different from what it is. So we're kind of changing the engine of a plane as it is flying. In fact, there are two planes flying in parallel. We need to build a third jumbo jet with the good parts from each of those engines, right? That's where my challenge is.
Great. Thank you, Sudhakar. I know we are almost at 35 past the hour. What I'll do is I will start including some of the questions into my discussions with you. Jimmy, we were going to talk about payments, which is showing a very significant uh, innovation in the industry, whether it is payments through WhatsApp messages, contactless payments, and like someone in the audience mentions cryptocurrencies. Uh, what are you seeing in terms of trends and focus areas?
Yes, Rahul, that's a big question. In terms of when you're talking about financial solution promise to revolutionize the way consumer pay insurance for money. And first, I want to make sure that provide a quick background on when we're talking about payment. So we all pretty much custom with what I will call a semi-cashless society because we use our credit card, and there are a lot of applications that are being built on existing payment systems. So I will be talking quickly about four different kind of payment systems to really get into where we are now and where I see the trend going. So the first one we talk about is mobile payments. Mobile payments you can segregate that into 7 categories. You have SMS or text messages that you can use to pay for products and services. You have direct mobile payments that use the two-factor authentication or a one-time password. Some of us are pretty much very regular that we use that. And we have online wallets. That's PayPal, Amazon, Google, Apple. You have quick response or QR code payments. You have the contactless, we call them the NFC communication. When you go to Walmart or to any of the stores, you take your credit card and you wave it into that machine. You have cloud-based mobile payments. You even have this one. I've seen it very in few places. It's the audio signal mobile payments. It's what we call the near sound data transfer. Pretty much what it is, it produces audio signatures that the microphone over the cell phone can pick up to enable electronic transactions. Not only, so those are the category for mobile payments that many of us have pretty much have used at least one of those categories. We have streamlined payments that have to do with location-based payments or geotagging. Some of the companies that have pretty much prevalent in that field is Magic Band, BPay, Ship Wallet. You have integrated billing, Uber, Order Ahead organization that deals a lot with mobile ordering or payment access apps. And last is the next generation security, which is where most of the trend is really gearing towards, biometrics, location-based identification, tokenization standards. And Visa, MasterCard, they're very involved in some of those. Now, we cannot leave behind the AI and machine learning and cryptocurrency also part of those that you will, but I like to put that in different category by itself. As we enter 2021, what I've seen, not necessarily some of those technologies because they will just pop up. They don't really tell you when they're popping up. But what I'm seeing happening is the trends towards the cashless, more cashless and invisible methods that will enable data-driven engagement platforms for customers. Uh, the world will not be cashless in the next 11 months. Let's be clear, because there are some challenges. You have merchant adoption. Not all mom and pop shops accept credit cards or mobile payments. Cash is convenient. When you go to the farmer's market or when my kids want to go to the neighborhood store, they will still use cash. But there also a segment of the population that is without primary bank accounts, or there are developing countries in the world that do not have the infrastructure for that. Nonetheless, you do have the trend that is going towards cryptographic protocols, peer-to-peer transfers, and mobile money, which is different from mobile payments. One of the challenges that those trends will face it's the fraud that is still relevant in trying to find what type of regulations to put around those that currently banks have the trust of consumers. When you make your deposit in the bank, the regulation pretty much provide that safeguard that your money is safe. But when you go outside of deposits, you get into payments, lending, it's a whole different world. In summary, what I'm seeing more is areas of the payment market where there will be a consolidation of all the payment methods that I just mentioned, and banks will have a harder time to evaluate credit worthiness for customers, because you're looking at the fragmentation of the market. It's going to be hard to really evaluate payments because I can make all my payments to PayPal or so on and so forth that the bank may not have access to. So the role of traditional financial institution will change, and I believe it's going toward that trajectory. It will change due to the evolution of decentralized or non-traditional payment options or schemes that consumers will have available. I see this to be more of an imminent change in the way we do business when it comes to banking.
Thank you, Jimmy. And to your point of the roles being changing, Equifax probably has to deal with their role in this new world, especially when the payments are becoming so diverse. How does the role of the agency change, Raj? And how are you leveraging modern technologies to deal with things like fraud?
Yeah, so like as you all know, recently we just announced acquisition of Cloud. So we both have homegrown or organic technologies that we developed, and we have been constantly developing behind the scenes. And on top of it, we have been acquiring companies that can help us in this area. So one is obviously acquisition of data, and also both acquisition and developing new technologies that will help us to take advantage of the data that we just acquired.
Great. So I know we may have time for a couple more questions here. And I see a question coming around APIs, around cloud. So Jimmy, what's your opinion about open API architectures? In Europe, at least, there is a banking regulation about open banking that is driving those kind of architectures, but we don't have such a regulation in the US. Do you see the US banking industry going in that direction, even without regulation?
Hey, Kiran, you'll probably be the person for this, because this is a loaded topic. Because I mean, you are talking about an open banking architecture, and you're talking about regulation that I mentioned earlier. Let me just take a snap at it real quick. I have been following the Congressional Research Service. They released an interesting document back in April that talk about deals with regulations that address the open banking component. So it is a fascinating read. So let me provide some quick background real quick, and then Kiran, I think you'll probably be best to talk about the API component. So we do have a trusted financial system, as I mentioned, because the federal government provided some guarantee on our deposits, right? So traditional banks are pretty much trusted in that aspect. The same regulations that protect financial banking institutions are the same regulations in some aspect that's holding them back when it comes into the other world. So, and many of you, I don't need to remind anybody about the global financial crisis in 2007 and 2008. So some of those regulations do have a purpose. So fintech companies do not fall under the same regulations of traditional banks. So they have more latitude to innovate. They can improve the efficiency of the financial system and also help customers and make banking more fun, if I can use that word. So the question of the challenge is whether the existing legal and regulatory frameworks, when taking into consideration new technologies, new capabilities, and new innovations from fintech companies, can effectively protect consumers against harms without handicapping the benefits that they can get from technology. So some aspect that falls under regulations, we have proliferation of internet access and mobile technology, big data, alternative data, cloud computing, data security. Now, you talk about open banking, talking about the API, just for the audience to have a good understanding of that. The technology that's often used to collect account data is what we call the web scraping. It is a technique that scans website and extract data from it. So pretty much when you go online, you enter your username and password, that software goes to your bank, connect with your bank, and pretty much it scrapes the data because mostly all that information is available. Now, although it is advantageous because it gets all that information pretty much right away, but it also offers some drawbacks in terms of data websites updates. Most financial institutions provide access to customer information through what we call the structured data feed, or API, or application programming interface, whatever that you can call it. It is an alternative to web scraping, which one is better, web scraping or API? It is for discussion. API appears to be more secure in terms of cybersecurity and fraud risk. When we use API bank standards with customer approval to share information from the bank and from that third-party software, we call that open banking. And many people use some tools to manage their personal finance, such as Mint, that pretty much connect your account to track your spending and so on and so forth. So the benefits are there. The main issue remains privacy, security, and cybersecurity. I'm sorry, privacy issues and cybersecurity. Open banking initiative typically specify when and how financial institutions can share your data. For example, the UK regulators require customers to approve of information sharing with specific parties. US banks, from my understanding, I could be wrong, already have that control and limit how customer information is shared. And we input, of course, from the customers, and I'm not sure they are eager to give up that ability. So the regulators in the US face I would say, four major questions. Should data security be prescriptive and follow a normative standards? And if so, that will lead to inflexibility and may harm innovation. Question two, should data security be government defined and outcome based? An outcome based approach will also lead for banks to now comply with a wide range of data standards. Question three, should relevant data security security laws continue to cover all sensitive individual financial information? And last, should the scope of these laws be expanded? The answers to those questions will most likely dictate the direction the US banking industry will go along with regulations. So this is a long answer, but the short answer to this question is it will have to depend on how US regulators understand and what type of leeway or what type of restriction they want to establish on US banking.
Thank you, Jimmy. And I know we are out of time. We're planned for 45 minutes, but I'll just go over a couple of minutes more to quickly hear from Kiran, and then also from Raj on the topic. Even though not in banking, Equifax in a parallel organization is looking at it very, very keenly. So would love to hear from Raj as well. But over to you, Kiran.
Yeah, I think there is activity happening as far as open API architectures go in the US, right? There is no question about it. There is NACHA that is coming up with API standards for ACH, the FNS group, right? But in addition to that, if you've seen the recent news with what the Financial Data Exchange has done, right? They've added 33 new members in 2020, right? So we are seeing the activity not in a regulated way, not coming from as part of, like the Europe has done with PSD2. But what we are seeing is that there is more acceptance to aligning to certain standards in the US, right? So I would say there is this is like the beginning of something of an open API architecture, regulated or not. I think Jimmy covered those points in great detail, so I'll not repeat that. I think the key here, the key point for me was the whole privacy discussion, right? Even if all the banking entities in the US or financial institutions come together and adopt FDX, for example, there's still this case of how do we manage customer privacy and consent? Where does how do we regulate that, right? That part is key here to make sure that the customers that are using these services are comfortable with their data being shared. The other point that I would say is that as we think about customers, I think it's important to think about the teams or the organizations that are leveraging these APIs, right? Without a consistent standard, I think there is a lot of effort and time that goes into building all of these applications, and there's a lot of screen scraping happening. So purely from a technology perspective, there is a lot of advantages to adopting a standard across financial institutions. So I'm definitely looking forward to what happens with NACHA and what happens with FDX, because there's a lot of promise with leveraging modern architectures and going away from file-based transactions to more real-time, because the world has become real-time in a very short time. And the financial institutions at this point are catching up. We just need to accelerate that path.
Thank you, Kiran.
While there is a technology-centric answer that Kiran and Jimmy both covered very nicely, but let's take a step back and first of all understand why was open banking even introduced, right, for a minute. So that the problem in UK is that 4 or 5 banks, whatever, they had like 80% of market share, and what worried the congressman there is that there is no competition between the banks, and once a customer goes into a bank and they are there for life. So that was a problem they were trying to address, and the hope is that once we open up, to figure out who is paying what for how much, who is paying for what service, how much, then hopefully people will foster competition, like banks will foster competition and so on, right? I don't know if that problem exists in US to begin with. Right, I seriously doubt that problem exists in US, right? So we have our market, like we have like much more fragmentation than like four banks, and then we have a lot more. Then there are like many channels of getting the same information, the competitive information and things like that. So I seriously doubt that problem actually exists, and I'm guessing everybody, like including banks, and I think us, we are carefully looking at it, and we are, I think, taking a wait and see approach, right? Like everybody, like I think like all of us are looking at it very closely, watching the developments, and then sort of when things happen, if and when things happen in US, I think we are ready.
Yeah, I would like to add to one point to that. I think it's very fair what Raj brought up in terms of challenges. But where I see the opportunity for all organizations in the financial space is the innovation that comes out of having open APIs and standards, right? So that is what we are starting to see a lot of in the UK. I think the US will benefit a lot with the standardization.
Yep, and close sister industry, insurance, is also seeing a big benefit coming out of open API architecture. So the next, not only 2021, next few years are really going to be very interesting, both from a technology and business perspective for this industry. And I know with that, we'll wrap up today's session. Thank you so much to all our panelists, Jimmy, Sudhakar, Raj, and Kiran. It was a great discussion. We can go on because these are such interesting topics for a long time. We'll wrap up for now. Thank you to the audience. Great set of questions. We went through some of them. Hopefully you found that very interesting. You can always contact us at the contact information you see on your screen. We'll continue to have future webinars. So be on the lookout and join us again. Thank you. Have a great day, everyone.
Thank you, Rahul.
Thanks.
Thank you. Bye.